Nerina, we've seen a bit of a surprise turnaround in the last half hour or so on the JSE. We traded weaker most of the morning. All of a sudden, the bourse is up by about 0.5%. Unexpected?
Relatively, yes. Certainly after the experience of the US markets and the Asian markets first thing this morning, we came in expecting blood on the streets. Although we've had some good cues from the European markets, some good numbers out of some of the corporate earnings that we've seen out of Europe this morning. Deutsche Bank reported results way ahead of expectations. Royal Dutch Shell out of Holland also reported better than expected numbers, and these have certainly changed the sentiment on the European bourses, and currently we are taking our cue from the better partners in the Northern Hemisphere, and also the US futures have turned positive. Probably a little bit early to say whether this could be on the back of expectations on the US GDP, but certainly at the moment our markets are trading stronger on the back of the European bourses that have also turned positive.
Because just looking at the reaction we saw to those housing data yesterday out of the United States, it really looked like the markets could be in the throes of a correction. Do you think that we are still going to see a correction on these markets?
I think it's a fairly wide-held consensus that markets have run ahead of the fundamentals, not only of the fundamentals of the markets themselves, but certainly ahead of the fundamentals of the economies. And I think a lot of people thought that yesterday was maybe the start of a pullback or a retraction that is well overdue. I think part of the problem really is that it seems that the whole world is on the same side of this trade. Everybody expects this pullback, and you can only really have the pullback if there is somebody on the other side of your trade. So I think we will continue to see this sort of volatility. We continue to see divergence in terms of results that come out, company results, economic data. There's the almost the fight in terms of sentiment between whether we are comparing numbers relative to the expectations or relative to what the previous numbers were a quarter ago, a year ago, whatever. And I think when we compare them against the expectations, a lot of those expectations have been dampened and pulled back quite substantially. So when we get results that are supposedly better than expectations, they might be better, but they're certainly better against an expectation that is way below what the similar sort of results were a year or two ago. So I think the market is struggling to digest these conflicting signals that it continues to get. And then even when we look at our economic data, some of the numbers that come out seem to be very positive for markets, others are very negative for markets, and it's quite difficult to digest all of these. Yesterday, very negative news out of the US in terms of the economy. Today we saw German unemployment numbers come out better than expected, although at a very high level still of 8.1%. Is that good or is it bad? And I think this is the sort of sentiment that the market is struggling with at this stage.
And of course, you did mention those US GDP figures that are due out this afternoon, and the market's looking for a pretty good number there, considering that the economy contracted in the second quarter of the year.
Yes, the US, of course, is quite well known for restating previous figures. So it's quite difficult to say, we certainly don't have a view on what a restated figure for the second quarter might come out at. Market expectation for the third quarter GDP is in the region of 3.3% quarter on quarter. This certainly would be a very good number. I'm not quite sure that we're going to get quite as far as that. I don't think either the imports or the exports have been sufficient to really meet that, although the weakness in the dollar over the past quarter might actually have supported their exports quite a bit. We remember that we had quite a weak and quite a negative surprise out of the UK with their recent GDP number, and it will be interesting to contrast what the US GDP number comes out as. If we look at just the recent supporting economic data out of the US, such as the home sales, it certainly does not bode well for the GDP number. Also, the unemployment figures still remain very sticky in terms of unemployment. It doesn't appear as though the government stimulus is finding its way all the way through the value chain to where it can really make a difference. So yes, I think that number is certainly going to be watched with a lot of interest.
Well, just looking at some of the numbers we had out here this morning, we had results out from Goldfields. It reported a 36% drop in adjusted earnings per share from the fourth quarter through to the first quarter, and really impacted by the rand's strength over that quarter.
Yes, I think unfortunately we find many of our local commodity producers are caught between a rock and a hard place. Certainly our local gold producers have not participated in the rise in the gold price in dollar terms. We know that a lot of the rise in commodity prices have been on the back of a weaker dollar, and obviously on the gold price in particular we often find that the rand then strengthens relative to the dollar, and that's exactly what happened in terms of the top line for the likes of Goldfields and most of the other gold companies as well. well. So although production was reasonable, revenue was not quite as good as one might have hoped for, and at the same time they certainly had significant cost increases, not out of the ordinary, certainly what would have been expected, but with the Eskom type of price hikes that have been coming through, and with labour demand still on the radar all the time, we do find that the companies really are in a margin squeeze situation. And although the results were pretty much in line with expectations, when you look at the reaction of the market to the gold sector today, in contrast to the rest of the market being up at the moment, the gold sector is still down, and this is despite the rand being weaker and the dollar actually, the gold price actually holding its levels quite nicely. So I think the market clearly telling us there that the gold sector and many of the other commodity players finding themselves in a margin squeeze situation.
Of course, we have Telkom making headlines for the wrong reasons this time. It could face a 3.6 billion rand fine rather for abuse of its market dominance. I mean, do you think this is starting to be reflected in the share prices? Are investors reflecting this?
Not really. It's very early days. This is really just the recommendation that has been made for the fine that should be imposed. I think it is very unlikely that a full 10% fine will ultimately be imposed. If we look at the 3.4 billion that is suggested, that is, by the way, 10% of their revenue for the 2009 financial year. It translates to close to 650 cents earnings on a pre-tax basis. So it's quite a severe number, and I doubt very much that the full 10% will actually be the final amount. Telkom will certainly contest this, and I think we must remember that government is still a substantial shareholder in Telkom, and as such I don't think they will take too kindly to such a fine being levied. I'm not saying that what Telkom did is right, certainly not, but we must bear in mind that Telkom is certainly not the only company in the only industry that have been certainly been put up for collusion and for anti-competitive behaviour. I think what is more concerning maybe in all of this is that it's another notch on the line of clear additional intervention into the from the regulatory side and from the government side in terms of the free market system. And although some of it is very positive in terms of maintaining a free market economy and maintaining a well-regulated environment, I think the market is telling us that they are concerned about an increased regulatory and competitive environment for many of the end suppliers in the value chain. We would prefer, therefore, to rather be higher up the value chain. If we look within the telecommunications industry, we are still on a continent where there is a severe demand for telecommunications, and especially mobile telecommunications. Now, of course, Telkom is also provided to much of the infrastructure in that space. The problem is that you've got government that is demanding lower fees, you've got customers that are demanding lower fees, and at the same time you've got this demand for massive capex because of the infrastructure that needs to be spent. So we would rather be higher up the value chain and say, let's go to the infrastructure providers where we know the demand is safe and will not be affected to the same extent by the regulatory interference.